Good morning, traders and investors. Roger Scott here. Monday, March 27th, last week of March. Don't ask me where this month has gone. I don't have any answers for you. It's about 7:33 in the morning. The market's going to gear up to open in a little less than 2 hours. I'm a little bit early for you. Eager Beaver Monday, as I call myself. And what did I tell you? I told you that this whole banking fiesta is going to disappear, and it looks like it's moving in the right direction. We're not over it just yet. Let's calm all down. But things are moving in the right direction. Now, today's Monday, and I want to give you the broad view of the week, what to expect, threats, opportunities, and so forth. If you're in our VIP room, I've also included a seasonality chart for the forward week so you could see which days are good for each sector. Oh yeah, it's like that. Now, the Dow is up about 200 points, the Nasdaq is up about 60 points, and the S&P is meeting us in between. This is not random. Anything over 100 points is not random, and it looks like we could see some bullishness today. Now, just to give you some idea of what to expect this week, we got international trades in goods and services. This is a big report. We've got consumer confidence. That's a really big report, especially because it's not after a major report. So this will be really important tomorrow. We got petroleum status report. Not too concerned about pending home sales because those numbers have been actually really solid. Even though they're worse than last year, they're really solid. Then we've got the big daddy. We got GDP on Thursday. This is going to make GDP is one of the biggest reports of the quarter, and it'll show us how much growth we had. And speaking of GDP, it'll be very interesting to see how consumer sentiment reacts after the GDP. This is what I mean. At least consumer confidence is coming out before the GDP, so we'll get a little idea of what people are thinking. I'm assuming the confidence level is a little lower than usual because of what's been going on with the banking sector, but we'll see if that's priced into this. And then we've got personal income and outlays report. This and GDP are the biggest reports for the week. So don't be surprised if Wednesday's slightly muted because traders are positioning themselves for the GDP and personal income. You might have noticed, and this is actually something I want to talk about. I usually talk about algos on Friday, but one of the biggest things and one of the biggest times to see whether algos are active or not is the day we have big reports, not the day before we have a big report. Usually algos come in when liquidity is really hot because they need that liquidity to be able to not hurt themselves or create a market that they have to chase themselves. They need that liquidity. So they're going to trade during periods of high volume. High volume is during the closing bell, major reports. When they don't really take action where people are waiting and repositioning. So I'm expecting algos to come in on Friday and Thursday. Now let's talk a little bit about what we can expect today from the market. So market participants welcome news that First Citizen Bankshares has agreed to acquire Silicon Valley Bank's deposit loans. This is really important. Treasury Secretary Yellen said in a statement afternoon on Friday that while some institutions have come under stress, the U.S. banking system remains sound and resilient. At the same time, investors continue to bet that the Fed would pause its interest rate hikes at the next monetary policy meeting in May. Now, right now, and this is really important, I wanted to show you this. Look at the reaction of the 2-year bond after last week's data. Just look at it. Up. The 2-year bond is telling us that the Fed is not, the 2-year bond is telling us that the market does not believe that the Fed is going to keep raising rates. Now, the market could be wrong, but usually the market is right, and the 2-year is very sensitive. And this action is telling us that there's just not that much upside left. So this is really important to keep an eye on that. Treasury Secretary Yellen said in a statement Friday afternoon that while some institutions have come under stress, the U.S. banking system remains sound and resilient. At the same time, investors continue to bet that the Fed would pause its interest rate hikes at the next monetary policy meeting in May. So we'll see what happens because the 2-year bond is moving up, not down. That started happening when the Fed stopped raising rates lowering rates last time too, on the way down. Over the weekend, Bloomberg News reported that U.S. regulators are considering the expansion of an emergency lending facility for banks in ways that could give First Republic Bank additional time to shore up its balance sheet. That's really important. Meanwhile, Minneapolis Fed President Neil Kashkari, that's right, Kashkari said yesterday in comments to the CBS show Face the Nation that recent bank turmoil has brought the U.S. closer to a recession. He says it definitely brings us closer. What's unclear is how much of the banking stresses are leading to a widespread credit crunch. That credit crunch would then slow down the economy. This is something we're monitoring very, very closely. Meanwhile, you've got U.S. core personal consumption expenditures this week, consumer confidence, GDP, initial claims, as I mentioned. In addition, several Fed officials will be making appearances this week, including Collins, Barkin, and Waller, and Cook. Now, these guys have actually been pretty straight up lately. So it'll be interesting to see how they're responding. European Central Bank President Lagarde told European Union leaders Friday that the Eurozone banking sector remains healthy due to the strong regulatory regime. That's very positive. China, Shanghai. China's Shanghai Composite today closed lower with energy and chemical drops leading the fall. China's Petroleum Chemical Corp slid over 3% after the company recorded a 6.9% drop in net income for 2022 as a string of COVID curbs dented fuel demand. Also, a senior Communist Party official said, I can't believe I'm using those words, that the foundation of Chinese economy recovery is not solid enough, warning the potential spillover effect from global economic problems. In addition, government data on Monday showed that China industrial production fell 22%. That's very bad for U.S. economy, indicating factory sector was still struggling even after the country eased its COVID restrictions. Japan stocks closed higher as prospects for monetary policy tightening lessened after recent inflation readings showed that inflation in the country was easing from a 40-year high. Meanwhile, First City Bank shares climbed 12%. First Republic Bank soared 24% in pre-market. And Berkshire Grey, I don't even know what this bank is. I guess they entered a merger with SoftBank, up 17%. So financials are definitely stronger. Speaking of financials, actually, I'm not speaking of financials. Carnival's coming out with earnings today. I call it a floating petri dish, and I'm not so sure that that's going to do so well. Now, looking at sectors, I've been wanting to talk about this. I've been telling you guys that consumer staples is heading higher. Now, if consumer staples is heading higher, and it looks like they are heading higher, we may see a nice little breakout in this sector, which has been, look at this, let me just change this view, which has been really, really choppy. Now, remember what I always say, after a strong period of consolidation, we have a nice breakout. So if we get a nice juicy breakout from the consumer staple sector, we may get a rally. Now, I'm very concerned that we may see more downside in consumer discretionary, and where is this sector? Communication services. Information technology has been actually fairly strong, and we still have 58% trading above the 50-day moving, the 200-day moving average, and it's holding on fairly well. Looking at the broad market on a 50-day line, let me just show you. It looks like we're reached support level, and it looks like we may be bouncing from the current level, or we may be coming down just a bit more. But the bottom line is, this is not a seller's market. This is starting to become a buyer's market. In terms of sectors, and I want to show you the strength because things are changing quickly, technology and communication services are still leading. Unless interest rates really are going to start going down, and I don't know if we're there right now. I think it's temporary. I believe that industrial, consumer staples, material, healthcare is going to lead, and these two are going to finally become best friends with consumer discretionary. Now, it hasn't happened yet, and it's been a while, and we've all been surprised by interest rates actually going lower. Interest rates right now are lower than they were, I think, last summer, or right where they were last summer. So I'm looking for a little more of a reprieve and a little bit of upside in major sectors because bond yields are actually coming down. Let me show you the 10-year too. You'll see what I'm talking about. See that? It's been moving up. When bonds move up, interest rates move down. So be very, very mindful of that. In terms of sectors that are just totally overdone, let me show you financial stocks. Whoops. Look at this. You got to see this. They've had it. They've had it. This is COVID right here. Maybe another bump, but folks, it may be a time to start getting into financial stocks. It may be time to start getting into real estate stocks, which have priced in just about everything humanly possible. Look at that. So it looks like the market can get some nice turbulence here. Look at energy. My God. Look at that. So I think we're going to start seeing some upside. I think this week is going to be mixed to positive. I'm not seeing any craziness. And remember, the further we get away from the turmoil that the banking sector started, the more investors have very short memories. The more we're going to forget about that. Now, in terms of stocks that are leading right now, let's go to, let me just show you what's going on right now. First Solar is looking really, really good. Marathon Petroleum is starting to consolidate. Steel Dynamics is falling apart. But some of the other ones like Lamb Weston, GE is still in play. ANET is still in play. Wynn Hotel looks like it's coming back. It'll especially come back if GDP data is strong. But remember, China's having some issues, and that may impact things a bit. So be very, very cautious. NVIDIA's looking good. I'm liking the stocks that are going through a strong trend right now. Quanta's looking good. There's a lot of stocks that are looking healthy right now. So don't go with stocks that are trending unless they're trending at a nice 20-degree slope. Otherwise, just stay away from them. Now, I'll give you an update later in the week, but be very cautious. I'm cautiously optimistic that this week we're going to get away from the banking turmoil unless there's more craziness out there. Tomorrow, I'll give you major support and resistance level. But right now, let me just kind of give you where the SPY is so we can now kind of know where to expect. Oops, long-term. I'm a long-term guy. Look at that. Consolidation with some upside. I like where the market is right now. I think this consolidation is going to be good, especially in light of the banking sector. Don't expect miracles. And seasonally, utilities this week are very, very strong. They're actually a lot stronger than most of the stocks out there. So keep your eye on the utility sector. Now, before I let you go, folks, billions of dollars, and I mean billions of dollars, are flooding in and out of stocks every day. And when just a fraction of that money hits a single stock, that injection of capital has the potential, it really does have the potential, to send it exploding higher over the next 24 hours. It's one of Wall Street's best kept secrets. That's why my good friend Chuck Hughes and I are about to go live, 1 p.m. Eastern time today, to pull back the curtain and reveal how the rest of us can target these stocks. Follow the link. It doesn't cost anything. You guys are going to absolutely love it. I promise you. And if you want more videos like this, YouTube Wealth Press channel. There's a Telegram. We give a lot of free trades on the Telegram channel. And you can see pictures of my pets. Oh, yeah. My wife, my kids, my pets. Notice I said pets first. Just messing around with you. You guys have a wonderful week ahead. Follow the link below. Don't miss this class. It's going to be the last time we're having it. You don't want to miss out on it. It's happening today at 1 p.m. Eastern time. I'll talk to you guys soon. Have a great, great day. Bye.